What is up, YouTube? I'm Adam Odell, Chief Investment Strategist of MoneyMarkets.com. And this week, I'm not joined by my research analyst, Matt Clark. I have him assigned to an in-depth research project, so I gave him the week off of this Ask Adam Anything series. But nonetheless, Matt did pull out one of the most important questions from our readers and viewers this week, and that is centered on gold. So the question I have is, Adam, when we are seeing elevated prices at stores for all products and the government is spending a ton on new spending bills, why would investing in gold, gold stocks, silver, and still silver stocks not work out so well? When I look at 20 years of data, gold and silver prices and gold and silver mining companies' stock prices do not correlate all that well with inflation, M2 spending, or inverse to the dollar. Why should I believe that we are in a gold bull market and that I should own some gold and gold stocks? Well, this is a great question. This comes from Richard in Greer, South Carolina. Now, there's two ways to look at an allocation to gold. One would be tactical and one would be strategic. Let's start off with strategic first. The idea with a strategic allocation is that you believe that having some gold in your portfolio, whether that's physical gold or a gold ETF, ETN, or maybe even potentially gold stocks. If you're a strategic investor in gold, then you believe that an allocation to gold all the time is worthwhile. So whether that's 25% of your portfolio or 10% or 5%, you would want to keep that allocation on all the time. There was a man by the name of Harry Brown who came up with many years ago what's called the permanent portfolio. And it basically includes a permanent allocation to gold at the 25% level because gold has been shown during inflationary shocks, and certainly when the market is expecting inflationary shocks, to outperform other soft assets or paper assets, gold being a hard asset. So that would be a strategic allocation. I actually have a strategic allocation to gold and gold stocks in my 401k. There's always some allocation there. I don't move in and out of it. I just keep it topped up at the right percentage. The other option you have, if you want to invest in gold, would be tactically. You could use a trend following model, meaning if the trend is up in gold, you maintain a long exposure. And then if the trend, by whatever criteria you define trend, turns down, then you would exit that allocation to gold and move it into cash or move it into some other asset that is trending higher. So you could certainly do a tactical allocation to gold. Now, anybody who's followed my flagship newsletter, Green Zone Fortunes, knows that I have actually been bullish precious metals, gold, silver, platinum, for about 18 months now. So I actually recommended we added a gold stock and a silver stock to our portfolio in the spring of 2020. In response to the Corona crash of March 2020, precious metal stocks really soared. And we actually see that a lot during the early stages of a crisis or bear market. You see commodity prices and specifically precious metal prices as a safe haven play really pick up when stocks are selling off. So we got into that. That actually coincided with a long-term bullish breakout from a bottoming pattern in gold. So precious metals, just so you know, they peaked around early 2011, and they went on a 5-year down streak. So they were basically falling persistently through the very beginning of 2016. Then for the next 4 to 5 years, they just dragged along the bottom from 2016 to 2020. They basically just made what's called a bottoming pattern. And then in early 2020, mid 2020, as that V-shaped recovery started to take hold, we saw a very convincing, strong, bullish breakout in both gold, silver, and silver, and even platinum out of that long-term base. So Richard's question was, how do we know that we're in a gold bull market? Well, if you're a tactical investor and you look at chart patterns, you would know that by the fact that we've been in a bear market since 2011. So it's basically 9 years down. And now we've seen a bullish breakout above that bottoming pattern. So in gold, you're looking at roughly the $1,550 to $1,600 level. That's $1,600 per ounce. And in silver, the breakout was kind of between the $20 to $23 level. So those breakouts have still held. Now, I do want to read one other question. This actually comes from one of our subscribers to my flagship newsletter, Green Zone Fortunes, because we actually stopped out of these positions. We stopped out of the gold stock and the silver stock position that we'd held for about the last 18 months. Took a very small loss of about 20% on average. He writes, I understand our stop losses are part of risk management, but it also seems like we're selling our miners at the bottom of the market. The low for gold of 1675 has held. Seems like we would want to see this low for gold to break before selling. Are our stops too tight? Are we getting out too early? Now, this is a fair point. This came from Lewis, one of our subscribers, and he makes a fair point. So the bullish breakouts in gold and silver are still technically in play because the current prices are above those breakout levels. That said, gold miners haven't done quite as well. They've actually started to penetrate on the downside that bullish breakout level, and for that I'm using the ETF GDX. So the point is, we both may be right. I still frankly think that we are in the early innings of a multi-year new secular bull market for precious metals. The trade doesn't seem to be working now. It's kind of ironic, and that alludes to Richard's question in the beginning. Why with inflation and money printing and shortages, why are we not seeing the precious metals trade work out better? And that comes to, the answer to that is unclear. I'm a trader, so I look at price charts, and ultimately the price tells you what the truth is. And right now, the market is just not pricing in inflation, and I can't frankly answer why, despite the massive amount of money printing, that gold hasn't done better. Certainly some folks are saying that Bitcoin is new gold. A lot of the speculative money is obviously going into Bitcoin, and nobody cares about gold anymore. But I don't think that means that the secular bull market is over. I think that we saw an early inning bullish breakout. We've now seen a pullback, and I do expect that we'll see new highs eventually, probably in 2020, but it really is hard to say for sure. We really need something of a catalyst and really to see that uptrend repair itself. So what I'm telling my subscribers is, hey, we use risk management stop losses for a reason, so we can cut our losses short to 10, 15, 20, 30% potentially. And then if the trend starts to turn around and go back in our favor, we can always get back into a position. But it's much better to cut your losses and re-enter a position than to hold a loss for a 40, 50, 60, 70, 80% loss the whole way down. It is a slippery slope, thinking, all right, it's going to turn around. And if it doesn't turn around, then you're stuck holding the bag. So ultimately, I'm still bullish on precious metals, but right now the trade is not working. So tactically, I'm happy to move out of it and reassess that at another time and get back in. So those are my kind of broad thoughts on the precious metals markets, gold, silver. Certainly, everybody's looking to inflation and money printing and figuring out when that's going to certainly take hold and have an effect. And the answer is no one really knows for sure. These are things that are very hard to forecast. So take a look at the price charts, watch your trends. If the trend is moving higher, that gives you a better chance of a winning trade and lower drawdowns than if you buy as prices are falling. And so that's my take on the precious metals. So that'll be all for this week. I will make sure that Matt is back next week. Actually, next week, I believe we're going to have a very special guest on the show. It's either next week or the following week. I'll have to check with my team. But nonetheless, I have something very exciting for you, an expert in the crypto market that you're definitely going to want to tune in for. So that's all for this week. I'm Adam O'Dell, Chief Investment Strategist of moneymarkets.com. And thanks for joining me for another episode of Ask Adam Anything.